I'm Nick, I'm the founder of Mellow, and we're building the infrastructure for on-chain asset management. And basically it's the vaults that can be applied to very different use cases. They can work with staking, restaking, they can work with lending markets, they can work cross-chain. And recently we had the initiative by Ethereum Foundation about trillion-dollar security. And today I want to speak a bit more about the application layer and what's happening in terms of merging TradFi and DeFi. So like the crypto alone, it's a teardrop in the ocean compared to fintech. And right now we already see how things are slowly starting merging. And lots of fintechs, they already started launching their own L2s, or they're going on chain with some products with under-collateralized credit and things like that. And it's already something that's proven that it's operationally more efficient compared to current stack. And the existing stack in TradFi, it's not bad. Like probably some people in crypto normally say that like we will kill TradFi or something like this. It's not the case actually. The case is that the infrastructure in TradFi right now, it's outdated, and it's outdated because it's something that was built like dozens of years ago. And right now it's the point where it is the time to update this stack, and what we're building as an ecosystem is something that will move things forward, that will make it more operationally efficient, more composable, and that can be widely used for different TradFi use cases. So right now we already have everything ready for the real institutional adoption and adoption in TradFi, because before that probably some pieces were missing. But right now we have all the base layer with bridges, block explorers, RPCs, rollups, oracles, restaking, all things that you need on the base layer as the rails for the fintech. And we have the main building blocks for the applications. So we have different use cases with AMMs, RWAs, insurance, stablecoins, everything that can be composed in a product that can be used by different fintechs or TradFi companies to build products for the end users. And already like Kraken, Robinhood, Coinbase, Stripe, Revolut, they're all going on-chain or they're already on-chain. And this merge, it's already happening. So one of the key topics in this case, it's risk management. Because any product, it's some combination of yield and risk profile, and everyone is looking into how to build it properly. Someone builds the risk management models in-house. Some of them outsource it to external entities who build some risk models specifically for on-chain products. And it's the way to build structured products on-chain. Let's say if Revolut or any fintech is coming on-chain, probably there are very few clients of those companies who will use some products fully on-chain or who will be proficient enough to work with any protocols. So in this case, you need to combine the protocols, you need to combine some on-chain products into a structured product, which can be used in one click by any user of fintech, bank, some application, and all the complexity is getting abstracted away in this case. So right now we already have lots of curators who are working on chain, and they're already doing a great job in terms of building different products that are used by crypto natives. Some of those curators, they're also already working with TradFi teams and fintechs, and in this case they're also already helping them to build the products that can be used by end users. And it's the case where it's also all about simplification and getting some, let's say, one-click yield, which is really sophisticated under the hood, but it's something that's pretty simple for the end user. And tomorrow, I believe that we will see more curators coming from TradFi. There will be curators from banks, from insurance companies, and different fintechs who will be building products themselves using the whole on-chain stack. Or they will be working with existing curators as well. Maybe it can be a mix. So the stack that we're building at Mellow, it's basically the stack for next trillion assets on chain. And it's the stack that can be used for building those structured products and launching them for use of the for the end users through any interfaces, through any integrations, wallets, custodies. It can be any traditional fintech apps that will use the stack to provide yield strategies for their users. It's a composable and secure infrastructure, which includes different parts. The main thing is the Vault infrastructure. In our case, it doesn't require building adapters, so you can change or update the asset management setup really, really fast. You don't have to wait for, let's say, 2 weeks, 4 weeks, or even more to build a new adapter if you want to allocate to new protocol. Also, there are lots of things around how things are organized on the security front, because there are lots of monitoring systems that we utilize. There are lots of things on the Oracle level which we implement in terms of deviation checks or different security things that are on the Vault level. And we provide this infrastructure to any external asset managers. We don't manage assets ourselves. And we help to automate all those setups and basically build the product for the end user. It's very different entities that we are working with. So right now we work a lot with node operators, and we help node operators to build asset management setups for their clients. Because I would say all the major node operators right now, they're becoming kind of financial marketplaces. They're not just providing validation. And at the same time, it's different fintechs, companies working with payments, hedge funds, asset issuers, ecosystems. All of them are trying to build different structured products. Because even for crypto natives, when you're launching the new ecosystem, you want some single point where users can deposit assets and then they get distributed across the ecosystem. And one of the goals in this case, of course, to get more liquidity in the ecosystem and bring some yield to the end users. But at the same time, controlling those assets through the vault, it also helps to manage economical parameters of the ecosystem and, let's say, create liquidity on the secondary market for improving parameters on lending markets. It can be different, more sophisticated use cases. It can be providing liquidity to under-collateralized markets and things like that. So this is a very flexible stack that can be used by very huge variety of entities to build different products for their end users. And we also work closely with Lido. We launched last week the first instance of Core Vaults. It's our vaults and our stack for asset management. It's live on Lido frontend right now. We work closely with teams like Symbiotic, Flow Traders, Eigenlayer, Ethena, and others. And also almost all the major hedge funds and curators in the space, they also utilize our stack, and almost all the major node operators. So happy to chat more after the talk. And if you're building some products on the fintech side, or if you're building any products that can be used inside the ecosystem, we're happy to provide the info for that. Thank you.